tulips were one of the first stock market bubbles. I mean, it's asset bubbles, right? People bought tulips. Tulips were imported from the Ottoman Empire. The Dutch people loved them. They had a virus that generated these very interesting patterns, right? And so you had tulips that were very unique. They became very valuable. Merchants started buying them in advance to predict what next year's crowd was going to like. And then you had people buying futures contracts, call options on tulips. This was the origination of the call option was in the tulip market in Holland in the 1600s. So call options have been around a long, long, long time. Well, as the story goes, they became very, very valuable. People were going crazy to buy them. They were seen as very smart investments. The more expensive they became, that's an important concept. The more expensive something becomes, the more likely it is to be viewed as a smart investment, even though maybe it's not. Think about it. Okay, so prices went crazy. People were selling land, selling houses, selling personal possessions to buy tulips. And it all came crashing down, of course. And the government had to get involved, had to reassure people that, there's no reason that tulip bulbs should be falling in price like this. The government always gets involved. That's a sign. In fact, they had to bail out tulip investors. That seems to happen in a lot of these bubbles. The second bubble was the South Sea bubble in the 1700s. This was a company in England. The first publicly traded company, maybe not the first, but one of the first was the East India Company. And there was a lot of appetite for publicly traded companies. So England formed the South Sea bubble, and it sucked in everybody, members of parliament, royalty, noble people, all the way down to common folk. Everybody got involved. And even women could be investors at the time and could own stock. So that's interesting. It really expanded the investment pool. There was a big problem with the South Sea Company. It was terribly unprofitable, but it had been given by the government of England the right to all the trade in the South Seas. Only problem was there was a big war with Spain, so they really didn't have any trade in the South Seas. And even when that conflict was resolved, they were still horribly unprofitable. But that's not the best part of the story. The best part of the story is there was so much appetite for publicly investable securities that anyone and everyone started forming publicly traded companies. You could form one overnight. There were no regulations. In fact, there was a company formed that claimed to be able to make boards out of sawdust. There was a tremendous amount of fraud happening. In fact, there was one company, there was an advertisement for it. It didn't give any details about what it made or what its products or services were, but just that investors would be richly rewarded. People lined up to buy the issue as soon as it was announced, and the owner, after he had sold all the shares, quickly closed up shop and left the country. So there was a lot of rampant fraud. Well, the company directors of the South Sea bubble, or the South Sea Company, eventually started to sell their shares because it was worth so much money. The news leaked, the stock dropped, and you know the rest of the story. Even Sir Isaac Newton got caught up in this bubble. He said, I can predict the motion of the heavenly bodies, but I cannot predict the madness of men or humans or whatever he said.